What's up, everyone? Welcome to What Say You with Progress Realty Partners. My name is Dan Salonis.
I'm Adam Dickert.
And today we got 4 questions from 4 different investors. Adam and I are going to run through them, give them our answers, and hopefully help them out. So what we got today?
All right. So our first question is for Dan, and it comes from Mark from Dallas. And he wants to know, when negotiating a new lease, is there anything you consider non-negotiable?
That's a good question.
Good question, Mark. Any non-negotiables for a new lease? Yes. So for us, at least, and this will vary group to group, person to person. The one thing that's pretty much a non-negotiable for us when we're negotiating a new lease is annual rent increases. There's no way we'll bring in a new tenant without some type of annual bump. If not annual, maybe something that's every 5 years if they're signing more of a long-term commitment. But at the end of the day, we need to keep up with inflation. And we're buying these properties for cash flow. It's an investment. And we need to keep up with the fact that things cost more. So new lease, annual rent increases are an absolute must.
Yeah. What else we got? What's next?
All right. So let's shoot over to Adam. Jeff from New Jersey wants to know, when bidding on a property, how do I determine what my final offer should be?
All right. So ultimately, a lot of different factors come into play here. You can go based on market cap rates. You can go based on a number of different things. But at the end of the day, can you make money as a buyer, right? So when we look at properties, personally, I don't really care what the market cap rate is too much. It's a nice indicator. But whether we go up to $100,000, $300,000 or up or down, can we still make money on it? We have internal rate of returns. We have cash on cash numbers and certain metrics we're trying to hit. Whatever our threshold is based on that price for that property and that specific moment in time and nothing else. I don't care what anyone else is paying. It's what you can make money on.
Fair enough. All right. What we got here, magical voice?
So let's go back to Dan.
That magical voice, by the way, is Kimberly Bruno, the one and only marketing for Progress companies. So thanks,
Does a
Kim.
great job. What we got,
thanks,
Kim?
guys. All right. So going back to Dan, Evan from Virginia wants to know, or is asking, I'm looking to hire a new property management company. What questions do you think I should ask?
Yeah, and this is an important topic too, because you don't want to just hire the first property management company that you call. Listen, at the end of the day, when you're talking to property management companies, first off, what is their experience with that particular asset class, that type of property? If it's, if you're dealing with a property management company that typically does multifamily and you're buying a retail property, it might not be a good fit. Also, what are their procedures in place? Who's responsible within the company for what? Who's going to be your main point of contact? If your tenant calls up, who's going to be their main point of contact? And who do they go for emergency situations? You always want to make sure the lines of communication are very clear, that you know exactly what you're getting from the property management company. And if something goes wrong, ultimately who you can reach out to. Lastly, what do they charge, right? How much are they charging on the gross percentage? All those are big things and more, but that would be my main few points.
Especially from afar, right? Just really quick, if you're hiring third-party boots on the ground, you're cross country, super, super crucial to know the lines of communication.
Yeah, absolutely. And proximity to the property too.
Yeah.
All right, what we got here?
All right. So our last one, going back to Adam.
Nice.
Jim from Wisconsin says, I'm trying to negotiate a new lease at a smaller retail strip. Does it make that big of a difference if I put the tenant on a gross lease or a triple net lease?
Hell yeah. It makes a big difference. Hell yeah. Especially on a smaller retail strip. I mean, any asset, right? Triple net leases, the tenants are reimbursing for your major items, your CapEx, your roof, parking lot lights, whatever it may be. But especially on the smaller deals, that's when you really get hit the hardest, right? A small 12,000 square foot retail center, let's say half of your little strip is gross leases and the landlord's paying for those expenses. You can have one big roof replacement and your entire cash flow for the entire year is wiped out. Whereas on a triple net lease, in this exact example, your tenants are actually reimbursing for that, and you as a landlord aren't really having your pockets hit that hard. It makes a huge difference. Jim from Wisconsin, hell yeah.
Yeah, plus two on like a resale value. I mean, we as buyers, we always discount gross leases over net leases. So you're just naturally going to get, a little bit more interest from buyers for net leases versus gross. Less responsibility.
Absolutely. Yeah, for sure.
All right, guys, that's 4 questions we got this week. I'm sure we'll get another 4 more next week. This was What Say You with Progress Realty Partners. Again, my name is Dan Salonis.
Adam Dickert.
We'll catch you guys next time when we got more questions, a couple of more answers.